4 factors to treating AML CTF risks: tolerate, treat, transfer, and terminate. Organizations are exposed to different types of MLTF risks for which decisions should be taken regarding the retention and transfer of risks. In case the organization has developed robust internal controls to mitigate the MLTF risks, the risks may not be transferred to another third party. Still, if the risks are of the such type where transferring them to another party is necessary, organizations may consider transferring them. An example of transferring financial risks related to asset damage is to get all the assets insured by the insurance company. MLTF risks are uncertain and may happen at any time. Therefore, it is important to understand that fraud risks may have pervasive impacts on the objectives and profitability of the organization. A good way to summarize the different responses to MLTF risks is with the 4 T's of risk management, which are as follows. The first T is tolerate. In cases when the likelihood and impact of the MLTF risk are low, organizations may decide to simply retain the enterprise risk because they are within acceptable limits. The management must log and monitor the MLTF risks retained because retaining enterprise risks should always be an informed decision by the management. Management develops tolerance levels for the major processes and related risks. Such tolerance levels are defined to ensure that risk impacts must not exceed the defined tolerance level. Risk tolerance levels must be communicated to the relevant process owners to ensure that they periodically review and monitor the assessment process of identified MLTF risks. Suppose the MLTF risk assessment process indicates that the potential impact of the MLTF risk may exceed the defined risk tolerance. In that case, management must consider other appropriate strategies, such as termination or transfer of risks. The second T is terminate. The termination process aims to ensure that those processes and activities that create more significant MLTF risks compared to the benefits should be terminated. Some MLTF risks may be outside the enterprise risk appetite limits, or assessed as having such a severe impact on the organization that resulted in stopping the particular activity causing it. For example, organizations may decide not to continue with a high-risk customer in a particular region or country. The third T is treat. Organizations may decide to take action on the most severe MLTF risks to reduce the likelihood or the severity of the risks. Treating the MLTF risks is the action taken by the management to counter the potential effects of the identified MLTF risks. The purpose is to ensure that identified MLTF risks are addressed through effective controls, which enables an organization to prevent potential financial, reputational, and operational losses. Management must develop the structures, resources, and systems to respond to the identified MLTF risks. MLTF risk treatment is a regular and continuous process that risk owners need to perform to ensure that the internal controls implemented are effective enough to reduce the possible impact of the identified risks. The last and the fourth T is transfer. Organizations may transfer MLTF risks by entering into arrangements with third-party MLTF and KYC risk management organizations to identify and manage the MLTF risks on the organization's behalf.